Most investors are obsessed with the S&P 500 or the latest tech stock. But while the world was looking elsewhere, a 5,000-year-old asset just had its best year in decades. It's been called the poor man's gold, but that title is becoming a relic of the past. Today, silver is the backbone of the green energy revolution and a critical hedge against a fracturing financial system. In this video, we're breaking down the data, from its ancient origins as the world's first real money to why it just outperformed nearly every major asset class in 2025. Stick around until the end, because the 2026 price targets are starting to look aggressive. Silver didn't start as a speculative play. It started as the foundation of civilization. As far back as 3100 BC, the Sumerians in Mesopotamia recorded silver as their standard of value. For nearly 4,000 years, silver was more widespread as money than gold. From the Athenian tetradrachm to the Spanish pieces of 8, silver was the international standard for global trade. In fact, the British pound sterling gets its name from a physical pound of silver. So, what changed? In the 18th and 19th centuries, the world began a slow, painful divorce from silver money. The move toward the gold standard started in Great Britain after Sir Isaac Newton overvalued gold relative to silver at the mint, causing silver to flow out of the country. By 1873, Germany's move to gold triggered a global domino effect, leaving silver to be viewed primarily as an industrial commodity rather than a monetary one. Fast forward to 2026, and silver is now a dual-threat asset. It's still a precious metal, but its industrial utility is skyrocketing. Silver is the best electrical and thermal conductor on the periodic table. It's irreplaceable in photovoltaic cells. By 2030, solar demand alone could consume 40% of the entire annual silver supply. An EV uses roughly double the silver of a traditional car, essential for battery systems and charging infrastructure. From your 5G phone to AI data centers, if it has a circuit, it likely has silver. Let's talk numbers. If you look at the raw data since the year 2000, silver's performance is staggering. While the S&P 500 saw a total return of roughly 393%, not including dividends, silver spot prices surged by over 1,200% in that same period. But check out 2025. Last year was a black swan for the silver market. While many stocks struggled under high interest rates, silver prices exploded by more than 130%. It started 2025 at $29 per ounce and ended at over $70 per ounce, fueled by a massive supply deficit and a global rush for hard assets. Where is it going? Here is the institutional consensus as of early 2026. Analysts at J.P. Morgan see silver averaging around $81 per ounce in the short term, with some bullish scenarios hitting $100 per ounce if ETF inflows accelerate. Long-term targets as industrial competition for limited supply intensifies. Some forecasts project a range of $150 to $250 per ounce. Most experts recommend a 5% to 15% allocation to precious metals. Silver offers asymmetric upside. It's more volatile than gold, but that volatility creates explosive growth opportunities during bull markets. It protects against inflation, it's vital for the green energy transition, and it remains deeply undervalued compared to its 1980 inflation-adjusted highs. This is not a video telling you what to buy. You have to do your own research and consult a qualified professional, but the data is clear. The silver deficit is widening, and the world is running out of the white metal. If this video gave you something you didn't have before, leave a comment below. Please like, subscribe, and hit the notifications tab if you already haven't. If you liked this video, you may like this next one in the top left corner.